India growth resilient is the headline, but Commerzbank's warning is that inflation, deficits, and global pressure are building beneath it. The economy still has strong demand and services momentum, yet the risk mix makes policy discipline more important than the growth label. The confirmed event is that Commerzbank's assessment says India's growth remains resilient while risks are accumulating across inflation, fiscal deficits, and external headwinds. The reason this belongs in a crypto news read is that macro risk matters for capital flows, emerging market exposure, commodities, and risk asset appetite tied to high-growth economies. The opening pressure point is India stays strong, but risks rise against growth momentum versus macro strain. The first confirmed detail is growth is supported by domestic demand, and the immediate reason to care is that services and infrastructure remain key drivers. That means the viewer should track inflation and fiscal signals instead of treating the first reaction as the whole story. The confirmed context is the anchor. The confirmed baseline is a resilient growth outlook supported by domestic consumption, services, infrastructure spending, and export diversification. The risk side includes elevated inflation, persistent fiscal deficits, global slowdown risk, and structural labor market challenges. It gives the story its boundaries, which is especially important when the market starts filling gaps with assumptions. The two facts that set the baseline are clear. Inflation and deficits are named risks, and global headwinds can affect trade flows. That frame keeps demand and services support expansion connected to the actual consequence rather than floating as an isolated statistic. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. India growth resilient only makes sense once the mechanism is clear. The mechanism is a policy squeeze. Inflation limits rate cut room, while fiscal pressure limits how much the government can support growth. If policymakers tighten too much, growth slows. If they do too little, inflation and debt concerns can erode confidence. That mechanism explains why the event can create consequences beyond the first reaction. In practice, inflation and deficit squeeze policy is the hinge between the confirmed event and the next market or user response. The mechanism split is simple. Inflation can limit rate cut room, while fiscal strain narrows policy support. If that hinge fails, the strongest tidal-level claim loses force even if the story keeps attracting attention. The practical effect is not evenly spread. Investors, Indian businesses, policymakers, exporters, households, and emerging market funds are affected. The practical consequence is a more selective market view, where growth sectors still attract capital but macro buffers are watched closely. For crypto and risk assets, India's macro direction matters through liquidity expectations, currency confidence, and global growth sentiment. The useful boundary is that investors need selective exposure, while policy timing remains unresolved. The impact split is growth sectors may still attract capital and macro risk can raise selectivity. That keeps the impact focused on the people, markets, or systems actually named in the evidence. The open question is still part of the story. What remains unclear is whether policymakers act quickly enough to contain inflation and fiscal pressure without slowing momentum. That does not prove that strong GDP growth removes macro risk. The evidence would be stronger with inflation readings, fiscal plans, current account data, and reform steps will clarify the balance. This is the line between analysis and speculation. The unresolved split is strong GDP does not remove downside risk, and policy follow-through is the missing proof. The story can stay important while policy timing remains unresolved, but the stronger claim needs visible proof. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next useful signal is specific. Watch inflation, fiscal deficit signals, and policy actions from India's central and fiscal authorities. If inflation eases while growth and investment remain steady, the story shifts from resilience call into policy test. For India growth resilient, the next move should be judged by that signal. The trigger split is price data is the first signal and budget discipline can support confidence. If that trigger does not arrive, the story may stay in resilience call longer than early attention suggests. If it does arrive, policy test becomes easier to evaluate with facts instead of assumptions.